Who would have thought 12 months ago we were sitting here thinking about what's going to happen in 2020? No one would have guessed a pandemic. No one would have predicted a pandemic. No one did predict a pandemic. Markets were up, down, and roared back to life. I know you don't like making big, bold macro calls, but I'm going to put you on the spot anyway. Equities, 2021, up, down. Are you a bull or a bear?
Yeah, look, you're right, James. Who could have predicted 2020? What a crazy ride it's been. And, we've seen some stocks sitting there at record highs, and I think some stocks legitimately that have had their business fundamentals, permanently improved as a result of these pandemic-related changes. But ultimately, I think it really needs to be a stock-by-stock call. Some stocks, overpriced, and some stocks, are showing value on a long-term basis. So I think, you're not going to rope me into a 2021 call, but are we overall, do we overall still have an opportunity to find value? Yes, we do, but there's a whole lot of overvaluation out there as well.
Okay, well, let's stay on that overvaluation concept. Markets get crowded in, they get carried away. What's a consensus trade out there in the global equity market that you see where you think investors have gone too far in one way?
Well, I think the consensus trade is that, we're all saved by these vaccines. I think, the data has been, better than anyone could have ever expected, 90% efficacy, but it's important to go, all it actually does is reduce your symptoms. There's been no testing so far as to whether it stops it being passed on, and I think everyone's got this consensus view, as you've seen in this rally in markets, that the vaccine's going to come through, everything will be back to normal again, our lives will be restored back to normal, whatever that means, and therefore, economic activity restarts, and meanwhile, the Fed's going to keep rates low. And inflation won't be a problem. I think that's the sort of consensus trade that you've seen that's lifted this tide of companies, really across the board. And I think, there are some potential risks to that, given we still have economic activity, that still has to play out while this vaccine rolls out. We still have the block and tackle of giving people injections. We still have to worry about, is the vaccine a genuine vaccine passport? And how does the economy go in the meantime while that's taking place? So I think there's still a lot of water to flow under the bridge before we can, get as excited as potentially some parts of the market have already.
Okay. Now, last year, you called it on the nose, Alibaba. It's been a great performer, but surely there must be something in the portfolio that gave you a bit of headache in 2020. What's the one you got wrong? And importantly, what did you learn from it?
I think the interesting thing about 2020 is there has been so many learnings. And I would say the thing that we, got wrong isn't so much what we did own, but what we didn't. I think the thing about this, we could predict, this pandemic was going to cause a significant recession, a huge output gap in terms of economic activity. But the really interesting thing that played out here is almost that K-shaped recession, where you had this huge impact upon service workers and people that were, working in restaurants and bars and shops. But you had a whole bunch of people, ourselves included, who simply transitioned to working from home. And so you saw this huge upswing in, home building and renovation activity and, buying things for your home, skincare at home, luxury goods because people couldn't travel. I think that was a really interesting phenomenon this year. And, the lesson for me is that every recession and downturn really does take a different shape, and there's different winners and losers that play out through those circumstances. So we saw things like Home Depot and Lowe's and LVMH and others really Target, Costco perform really well this year. And in a typical recession, you wouldn't expect that at all. So that was definitely a lesson that I took away.
Okay, and what about a single stock that when you turn on the screen and you look at the portfolio, you go, whoa, I wish that one would be doing a bit better, something a bit different. Can you give me a name?
So the only thing that's happened, in recent times is, even on Alibaba, which was my pick for 2020, this is ultimately a short-term issue, but of course we've had, increased financial regulatory risk coming through in the form of the Ant Financial IPO being pulled, and that was pulled not just for Ant, but the implication here is that, the Chinese government is actually going to put a lot more regulatory oversight into place. And that's very relevant for Alibaba, and Tencent and a number of the other Chinese names that we look at, because does this limit, the potential return that these companies can achieve? Do they need to hold more capital? Will they need to have, put more money into the oversight of, of Alipay and other businesses? I think, it was a bit of a shock and a reaction, that markets had, because of course there was, the most widely anticipated and the most oversubscribed, IPO just about ever in Ant. Ultimately I think they will work through those issues. There was clearly, some CCP backroom conversations that were taking place around all of that. And I think over the course of time, it doesn't diminish the fact that this business has a significant, long runway of growth. If they ultimately need to add more capital, around the regulatory frameworks that the Chinese government puts into place, I don't sort of consider that all too different to, for example, Facebook investing more in its oversight over its platform, or, for example, removing, specific content per legislation in Germany or something like that. It's an incremental cost to the business, but it ultimately sets them up to be more successful in the future. And of course, being the scale player, within those industries becomes really important, because you can afford to shoulder that cost and burden, but still succeed at the same time. So yes, a short-term blip there in November for those Chinese tech companies.
Is there a lesson that you take away when you sort of reflect, something that you learned from that?
Yeah, so I think for us, we're very conscious of the risk around these businesses. We spend a lot of time trying to understand not just, a financial risk is a financial risk, and regulatory risk, frankly, exists all around the world, particularly in financial markets, being one among the more regulated, industries in the world. But in China, there is always that additional layer, the additional political layer around what could happen short term to a company, what is the politics around the senior management of these companies as well. And I think for us, we see it as a short term issue rather than a long term one. But it's certainly one that we're conscious of, and it was brought, a light shone on it in November. But again, it's a month. It doesn't change our long-term thesis on those stocks.
Yeah. You're out there scouring the global markets, trying to find best-in-breed global franchises. There's no shortage of great businesses out there, but they all have a different price. What's the one out there that doesn't hit your valuation threshold that you'd be wanting to snap up in a bit of a sell-off or some weakness? Yeah,
look, for me, I'm gonna, it's the same as last year for me. Amazon is one of the, highest quality businesses within our universe. And frankly, this year, a lot of those accelerants have come into play. The shift to e-commerce, their AWS cloud business is dominant in that space, and it still continues to be a huge market opportunity for them. And, things that they were really just starting to get into, like online grocery, has again been accelerators. You've got this business that, is wonderfully well positioned to, show its resilience, in a, post-pandemic world. But nonetheless, you still have this issue around what is this business worth? You have a business that's remarkably well positioned, but still, losing money in places like India. It's a really difficult one to really pin down in terms of, justifying those sky-high multiples that it trades on.
Okay, Amazon, too ritzy right now. Here's your shot though. You've got to back it up. Alibaba, a cracking call last year. It served you really well. We're after a fresh idea for 2021. What's your number one pick? And tell us a bit about the thesis.
Sure, James. The one I want to pitch this year is ICE, Intercontinental Exchange. This is a really interesting business. It's got a strong moat, and it's got some really nice growth drivers behind it as well. And it all actually started from its visionary founder and CEO, Jeff Sprecher. And he, brought about this digitisation of financial markets, more than 20 years ago, 1997, through the acquisition of Continental Exchange. That used to be, an email, open outcry-based system. He had the vision back then. Digitisation is sort of an everyday word for us today, but back then he had the idea, with his engineering background, to bring digitisation to those financial markets. And he's done that through these derivatives exchanges, Continental Exchange, with the Brent oil contract exchanges in London. Again, this is the open outcry, swapping tickets in a pit,
piece of paper,
chalkboards, and he's brought about that digitisation over time. He saw that this could be done, and what it did when he put that capability onto a platform is the volume expansion that took place. The ability for people to participate in those markets went through the roof, and that was really instrumental and pivotal, and he saw that before anyone else could. And I think the interesting thing there is that, and the quality aspect is that in derivatives contracts, we actually like those. They're really robust. You have a central clearinghouse, and you tend to have almost virtual monopolies in those important contracts around the world, being, crude oil or sugar. And so you have a really powerful sort of moat and network around those. And the interesting thing about the thesis now is that he's now moving into adjacencies. What other aspects of the financial system can he digitise? So they've bought Ellie Mae, in mortgage origination in the US, and he's going to really bring about that digitisation. If you think of the core hub of data that they will control, it's about adding participants to that network over time and creating that digital platform, again, for people to participate in a really seamless and efficient way. Right now doing a mortgage is a whole lot of paperwork. It costs $8,000 to originate a mortgage in the US. By the time you get information from that person and that person and that person, it's actually kind of clunky and analogue, frankly. And he's going to bring that to the mortgage origination business. And there's other areas that he can go to over time as well. The fixed income market, bonds is very analogue, as is things like insurance, underwriting and things like that as well. So it's quite an interesting opportunity. And frankly, it's trading at a valuation, only slightly above the market, where you actually have this significant breadth of opportunity available. So it's a really interesting business. That's my pitch for you this year.
All right, it's been great to have you in, and thanks for coming along again.
Thanks, James.